Good evening, guys. Ken at Tortoise Capital with the Nightly Strategy Podcast for November 2nd, 2020. Tomorrow is the day of reckoning, and then the real games begin. So we are deeply committed to short-term trading to the max, and let's see what we had today. So in the market health check, so yesterday, or I should say Friday, created that 10-day low, just inches above the 30-day low. We've got our 10-day high about 9 days ago, or 30-day high about 15 days ago, and then that peak experience that looks like about probably 40 days ago. Still looking at that gap in here. We've got a 4-day chunk of price action that looks like this one. We had something of a doji, not really a doji probably, because that's probably daily range is too big, but there was a fractional gap up. Oops, sorry. So we had a gap up. It went up, went down, came back, and finished sitting right on Z-1 hold price here at 330. Long-term fair value is at 328, so that has acted like a great big magnet that pulled price back down to our little fair value line. The RL10 just went into winter today, as if we needed to be warned, and it's still sloping downward. So even though we had 1 day of upward movement, the RL10 hasn't reversed yet. But if we get another day up, then this should bottom out and then start to peak up. And then based on where the dragon is, you could expect to see something like an SSC entry, if everything goes well, coming in somewhere around, I would say, 336. That would probably take 1 to 3 days. We're going to know an awful lot more about this market 3 days from now, once we see what the results are and listen to the posturing of how to count votes. It'll be interesting to see how modern media treats the challenges of being patient and interpreting the issues associated with vote counting in a non-denominational matter, or will they back their chosen candidate and interpret everything in that light and create more public distress? I think B, create more public distress. That would be my expectation. So in terms of price action, I see getting through this little gap area here to at least the spine of the dragon and really getting up to the RL30 looks to be pretty significant. That looks like a significant barrier to me. So we'll see how that works tomorrow. It's easy to see this as if it fails here and takes out today's low. I would say even the RL 270 fair value here at 328, I think that's where I would be getting significantly short, because I would want to have a position in if it breaks below 327. That's where I'd like to add a second position. And then I think I'd like 2 positions short there. And then if it breaks the 10-day low, a third position short. And then if the 30-day low breaks, 4 positions short. So that's my plan on the short side. That's pretty easy to see. The upside, I think I would venture if it breaks through 333. I think you got to be bold, because I think you have to get in there, because this should go pretty fast because of that gap. Second position, not until I think it gets through the Bollinger Band mean, call that 338. Third position, I think at the breaking of the skin of the dragon, that's about 340.5. Here's tomorrow's PSAR value right here. Boy, if it broke above that, that would be quite an amazing move. Hard to see that happening. I think tomorrow is volatile, but ends up non-committal. Man, who knows? How could you forecast that? So I just think it's volatile, and it'll start quiet and then start getting directional once the the early states start voting. Everything is going to be watching Florida tomorrow, because Florida seems to be the key state that without it, Trump has a near zero chance of winning. With it, he's got whatever slim chance he has is keyed by Florida. So Florida comes in relatively early. That one is going to be crucial. That's the one to watch. Okay, let's take a look at all right, so we have this isn't a lot of work. Okay. Not going to work for me. All right. So we have the S&P up 1.12% today. Treasuries were up 0.64. The Dow was up 1.56. The Russell 2000 up 1.78. So everything in the green today, and the two-headed monster of the small cap speculators in IWM were in front of the market. And the safety of the large caps were in front of the market today. So, and even the treasuries were there for people wanting to buy positions. That looks like, 4 different groups all making their decisions about wanting to buy prior to the election because they have convictions. People buying treasuries, driving up the price because they want the defensive position. They want the broad market, so they buy the S&P. They want the conservative large caps to weather the storm, so they buy DIA. And they buy the small caps because they're expecting a positive relief rally, and they want the extra juice of the small caps. God bless them all. All right, Brazil up fractionally more at 1.15. You got emerging markets in Wheaton up 1.3. The cluster of healthcare, finance, and silver all up around 1.9. Another good cluster here. You got the Ackman hedge fund, materials, energy, and oil exploration, clean energy and oil. So it was a big day for energy today, bouncing off the shellacking they took last week. And then, no surprise, at the top you have those materials companies and energy. So Devon Energy 5.6, Alcoa, DuPont up over 5%, Caterpillar 4%. Tesla, a good day of recovery to get above 400 at 3%. Simon Property and Boeing at 3%. Nucor and U.S. Steel around 2 and 2.25%. Home Depot, Walmart. So on the downside, think the sectors that were worse than the S&P, which was again at 1.12. The worst sectors were tech at 0.25, which makes Tesla's move even more impressive. So Tesla up here at 3% when tech itself was only up 0.25. That looks promising for Tesla. And then Mexico at minus 0.2. The things that got smashed today, Twitter hammered below 40, off 4.5%. Amazon lagging. Amazon, Apple, Microsoft, Cisco, the triple Qs, I can never remember their name. CRM, Everything well below the S&P, and then some more tech names suffering. All the big names except Tesla today. Google, NVIDIA, Intel. I should have added consumer discretionary gets pulled down by Amazon. So it was the day of not tech and buying broadly in America on almost like in reaction to America being on 10% sale right now. Salesforce. Yeah, thanks, Ken. I have a mind blank on that for some reason. I keep wanting to call it customer relationship management, which is what I think they do in some ways. But I can't keep that in my head for some reason. All right, let's take a look at some of the trades for today. So this one is this is Brazil, and I'm just trading this one by the numbers. Just by the numbers on this, right? So here's the open. It rolls over. Here's the RL10 in the belly of the dragon, and it the RL10 doesn't even get through the dragon and then reverses and goes higher. And this was after a gap up when everything had gapped up. So this felt like an automatic buy for me with about a 20-cent risk box, It moves out smartly for 10 minutes, and then a 1, 2, 3 exit would have been up in here. The sniper exit hit. And it wasn't even really a sniper so much as it was the Wu Wei, because the Wu Wei comes across to here. And now you have 1, 2, 3 on the fourth dot. I moved the stop to here, and then in the next minute it just hit. So there's a little fractional, and then this is a stop and reverse, and then here is the Wu Wei exit, and here is 1, 2, 3 on the fourth one. I move it down to here because this was bucking the trend of everything up. I already committed to doing the sniper with half a position following the PSAR, and then the other half doing the manager, and then as soon as the Bollinger Band mean catches up this, and they both exit down here a little ways later. But that's just routine, by the numbers, not much discretion, just executing. This is the Tesla trade. So here's a nice opening 5-minute cluster right in here. So it's a nice big gap up, finds support, and then breaks out of a, this is about a $3 box. And I just put my stop just below the VWAP in here. This felt correct. Instead of being all the way down here, I'd like to have twice the position size and monitor it. So this thing moves out nicely. I considered a second position here. I didn't. I'm nervous about getting too big on Tesla because it costs so much. This peaked here. There's a 1, 2, 3, and then this was such an orderly exit here that I wanted to make bank, and that's 2 execution R on the sniper exit, and then you would see the Wu Wei exit moves up right about here. You should be able to see that with your eyeball now. Comes over to the VWAP, and then just executes here. This one basically just was like this. I just committed to that early. Then this almost bottom ticks. We get it briefly dips into the winter, gives me an RLXD, and I feel like that's either caught a 2, which is, here's a low and here's a higher low, and there's the RLXD, and it's getting ready to break out above this. But it rolled over slightly lower than it did here. So rather than waiting for this exit to take me out over here, I just basically take the scratch at the Bollinger Band mean. I wouldn't be offended with a short right here when it crosses the VWAP. That under most conditions, that's pretty normal, especially when it then breaks below the RL270 and then there's a Z3 pinch starting to form here. And so when this breaks below the key price level of 400, this would be a reasonable place to get short inside here if you were going to short Tesla. But because Tesla was doing very well, but all of the techs were bad, I didn't want to short the strongest stock in that region. So I just got paid a little bit there. This one is Devon Energy. So the whole energy complex was crushing it today. Here was from the open a harsh winter. Support is spring crossing. Here's the PSAR flip. Right about here is where it picks up the Wu Wei exit. Routine second position here when it takes out the like the previous VWAP and the Z3, so I like that entry. And then it gives me a routine, my routine bottom tick manager exit, and immediately a reversal. In retrospect, this is one of those where I would consider, putting two positions back on. I got out of two positions here and then put one position back on. This is in retrospect, if I'd have been, not so scared all the time, I might have put two on there. But when this took out the Z3 pinch here, this rose up, came back, found support, and took off again, taking out the Z3. I added my second position, then a routine manager exit here. After this Z3 pinch, it gave a fake one, go two, and this turned out to be a nice trade after that one too. I don't have it marked up now, but that was a pretty good trade. Next, I already showed this one. Yeah. Let me hit a couple. Tell you what, I want to go into the week or the weekend report, the daily report, and then we'll come back and take a look at some of the trades from the room today for some learning points. Not everybody may want to stick around for that, but I still think the scheme for tomorrow is be ready for volatility intraday, hold nothing overnight until we see just how crazy the counting the votes becomes. The chaos that we live in. Maybe we need that every now and then. It's better than revolution, I guess. I guess we shouldn't be surprised that we've got a reality show unfolding right in front of our eyes. Huh? So we remain in bullish normal, all other things being equal. We're kind of stuck in the middle of this range here, neither overbought nor oversold, and having a little bit of recovery based on today's finish. ADX is slowly getting stronger. Bears are still in charge, but it's not a strong trend yet. Risk Z is still warning us about the downside. So we don't know if that is like this, that's going to break bigly, or whether this is the thing that rolls over here, but it hasn't rolled over yet. So we don't know. We don't know yet whether this rolls to the upside or rolls to the downside. So that's sort of that's the definition of a critical state. In the overreaction, we get the Qs and Asia less Japan. The Qs are also in a channeling signal. So Tesla was the first out of the gate with that, and Twitter gets smashed the most. So let that be your guide for thinking about tomorrow's follow through. So if tech is up and Tesla is best, crush it with an intraday position. Get as much as you can on it and enjoy, and then cash it before the day, or keep 1/5. Honeywell and Travelers are of interest. Two very strong names that have been doing well. The weakness in tech, there's Intel, Salesforce. Hey, I got it right. And Brazil. and Monsanto and Intel suffering if tomorrow's a weekday. In the Dow Tactical, handful of dojis, handful of channelings and overreactions. Nothing broke out of the trading ranges on the NDX, so this was kind of an inside quietude kind of a day, but still plenty of things way off their top of their 10-day highs. So that's no surprise there. And the names that we just like, Caterpillar was a winner today. Honeywell in tech. Those are names that I really like. Apple, I just think I'm ready for that thing to just really bounce, and I'm just surprised people aren't seeing that as an opportunity yet. And it's been down. If you look at this here, it's been down for over a month now. At some point, you got to believe that's ready to go. In the ETFs, handful of dojis again, handful of channeling and overreactions. Lots of 551Ws today, and plenty on the auto framer. No surprise. Basic materials and energy, oil exploration, and I think that's where I would continue to look for additional follow through tomorrow. I would be least surprised by a recovery in tech to take advantage of today's sell-off and the sell-off of the last 10 days. You look at XLK, for example, and it has been the worst performer out of the entire ETF stack. It's in the red on 1 day, 10 day, and 1 month. So it's really been lagging. The auto framer, no surprise there, has a ton of things better than 2-to-1 on a retest of the 10-day high, but just look how bad Intel has been at 10-to-1 recovery there. Brazil, based on our trade frame from this weekend, is still attractive at 4.5-to-1 if it could find some support here. The S&P itself at 3-to-1. So there's definitely some upside potential there. Only IBM and gold had a narrow enough range to justify to be ready for the daily squeeze. Joe Londano had a really nice trade in gold today, somewhere around 10R, so I want to make sure we get to take a look at that one. Still dominated by fall and winter in both the ETFs and in the Dow. I don't put much faith in this one right now, other than just to say, we're concentrating on the intraday trades. Honeywell had a nice big move today at 224 on the NDX. Walgreens also, but all other things being equal, I'd rather have the consistent strength of Honeywell compared to the tactical bounce in Walgreens, if I had my choice. Oh, and we do have a choice. And Caterpillar would be my second choice on the basis of this, with a 178 on the 3-day NDX. Meanwhile, materials, energy, and metals and mining all look pretty good today. And industrials also getting into the act. Now, they're not as strong as materials. If you look at materials, they're all greens and white, whereas industrial's been lagging a little bit. They have some yellow there in the intermediate term, but they have been coming along pretty well. So that bodes well for the economy, actually. And I think that's everything we want to talk about. This is, the market coming to rest on long-term averages as we're just waiting and seeing. That's exactly what that means right there. That was the least surprising last 5 or 10 days of all. Volatility stuck right in the middle and in the lower end of quietude. and the slope stat right at the long-term average. Resting right on the bottom of the river, as we've seen. And all of the, the 90-day and the 30-day index are back inside the yellow river, and the 10 is at a low. So this could very well lead to a nice bounce if we get a relief rally. I just think that's going to take a couple days to unfold, not till Wednesday, maybe Thursday. All right. So that's everything I want to cover on that. Let's, time permitting. Yeah, and it does. Let's get... We had some pretty good discussions in the room today, just getting clarifications on a couple of trading strategies. This one, I'm trying to see who did that one. That one was Catherine. She was asking me, she asked me the question about, let's see, where was it? Oh yeah, she was asking about, hey, is EWZ and SSC entry a supported spring cross? I said, well, show me what you're seeing so I can look at your charts to see if that is clear. Yeah, and it is. So what I would say is, this one is probably, I think I would call that a almost a Kata 2. This potential entry here would be, and maybe she bought, did she buy that in step 1? Yeah. This would be the SSC, because clearly we have this long, horrible winter, and there's the PSAR flip and the RLXD, and winter turns to spring. And then, her stop would be here. And then because this didn't fail, if you drew that line across here, you don't get the Wu Wei until about here. And then you're either tracking this or you're tracking that. So this is the Kata 2 entry. I love that one, because it's taken out that high. This was the, for those of you keeping score at home, this was that was the Kata that got paid on the hybrid frog. And then here's a collapsing dragon. Here's another collapsing dragon. And then that would be the routine exit for this move that was a clear winter. So that's why you like EWZ, is this thing just trades in an orderly fashion all darn day. So she did a really nice job on that one. Let's see here. So her question was, is Catherine in here tonight? That would be nice. No, she's on South African time. All right, so you notice the Z3 pinch here. And I like this entry, short. And she puts her wrist box at the PSAR. And then we get like a 1, 2, 3 bars down. Bar 4 is up and bar 5. And now the RL10 has rolled over. And this thing is becoming an SSC right here. Okay. And then this is where her stop would be. And then here's the VWAP as well. So you got a number of different reasons. So you have a 1, 2, 3 exit. You have a PSAR flip here. You have an RLXD and the SSC. And she's wondering about, the rigorousness of tracking, of keeping that initial risk box in there. Technically, I'm supposed to wait until the PSAR is past the entry before this were to come down and lock in no lose plus dinner for 2. Correct. And then she's asking, is there something in this price action that tells me that the downward move isn't working? Yeah, there's 1, 2, 3, 4 pieces of evidence that under other circumstances we would take as an entry, like this asset. Like if we hadn't taken the Z3P, we'd be justified in taking the SSC. So there's a reason enough to believe that thing could be going. The other pattern, though, that is specific to the Z3P is this notion of you have a really tight, the two Z3 lines have collapsed and everything is really tight. And then you get this first breakdown that triggers you to go south. And the reason you get it when it breaks out of the Z3 is that if you wait for additional confirmation, then all the easy money is gone. And then you find yourself trying to chase and catch a falling knife. So my standard work here, my standard practice is to just go ahead and take it. And then in about 3 or 4 bars, I should be able to get my stop to no lose plus dinner for 2 and lock in those gains. But in 4 or 5 bars, if it hasn't followed through, that failure to follow through, FTFT, is information. And this is part of the fake 1, go 2 pattern inside the Z3P. So that there's really 2 forms of the Z3P that work. This thing collapses, and either it just break down and go, or it breaks down fake 1 and then goes 2 legs up this way. It gets through this Z3 complex here. It fakes 1 and goes 2. So what I like to do on that one is, if it's within 4 or 5 bars and it hasn't collapsed in my favor, there was no cracking of the ice and a disaster to the downside, then I just, when this comes back into the Z3 or the edge of the river, or in this case where it crosses the dragon, I just stop and reverse and go the other way. And then if it gets out of the river, like it has, then I've already made back whatever I lost down in here. So fake 1, go 2 is this pattern here. It takes 1 or 2 or 3 bars and then it just goes the other way. And I'm ready to take that twice. So if this was my Z3 and it breaks down, it goes fake 1, go 2, and then doesn't break out from up here, but instead anywhere in this region breaks down and goes again, I'll take it right again, right where I took it before. And a lot of times it'll be that second move that's big. We see that fake 1, go 2 so much that made a special point of emphasis on that for the Z3P. Now, I want you to compare the Z3P to the supported spring crossing. These are at 2 different extremes in the trade. Let me tell you what I mean. At one end, we have the SSC, and at the other end, we have the Z3P, and that's in terms of directionality. In the SSC, we must have seen a harsh winter. So in whatever form it was over here, this thing has put in decisively a big loss. And now when it crosses the dragon, we now have evidence that there was a directional move of that magnitude, and that if this reverses, that a move of that same magnitude would be the least surprising move. And because we're so close to the turning point here near the belly of the RL10, that if that's our tiny little risk box, we get 1, 2, sometimes 3, just back to the point where it broke out. All right. So in this case, it's like, here's where the breakout occurred. If it doesn't go this way, we could get 1, 2, 3, maybe something like that, or even 4 to the previous Z3. All right. So in the SSC, we have clear evidence of directionality. It's non-controversial. In the Z3P, we don't have that. We have this. We have the absence of directionality. So regardless of which way it breaks out of this noise, if it peaks out of here and then doesn't follow through immediately in a big way, but comes right back into the noise, then there's no point in holding this. No, I really believe that's going to be the way it goes. No, this was just a blip on the radar. And so you end up scratching that trade quick. And now you're saying, well, maybe it's going to go test the far side of that channel. That would be the least surprising move. So now if you stop and reverse and get long here, and it just makes that channel move, you'll get 2 scoops of what you just lost down in here. And then if this thing turns and goes, then you've got a tremendous entry at this level, at the bottom of the channel. You collected 2 scoops in the channel, and then it breaks out of the Z3P. That is fake 1, go 2. It has 1 little leg down and then gives you 2 big rewards the other way. And this works on the same way to the upside. It fakes and doesn't go. So I just see that as a little triangle. I tried it. It rolled over. I scratch it and go short. And then when it breaks out this way, somewhere in here, I'll get my stop to no lose plus dinner for 2. So fake 1, go 2. And that's the difference between the Z3P and the SSC. The SSC, because we have seen that strong directional move and it's starting to reverse, we can have a really strong belief that this place where it turned is a strong support level, which if violated tells us we go short right there. It's uncontrovertible. But everything short of that is all noise. But in the Z3P, that entire range between the Z3 lines is all noise. And the first blip out of there, we don't want to wait for this thing to collapse to get into it. We want to just get in. If it reverses quickly, just get out. So what? Somebody gave you a free lottery ticket and it didn't win anything. So how many times do you want to accept free lottery tickets? All of them. You want to accept all of the free lottery tickets. So that's the lesson to learn from that one. Okay. So I want you to understand the difference between Z3P and the SSC in terms of getting out of the trade quicker. In the SSC, it's absolutely wu-wei exit. But in Z3P, it's not the wu-wei exit because you don't have that previous harsh winter to contend with. So here's Apple. And here is our harsh winter. There's a SSC entry there. And you've got 1, 2, 3, 4, 5 boxes just back to the VWAP. That's a good trade. Here's the wu-wei exit. You're not out of it yet. You're just waiting to see. You're just following the rules. If this thing pays off, off you go. If it breaks down below here, You say, oh, this upward move was a head fake, and now the size of this move is the size of this move. But you don't get that until it cracks below the belly of the RL10. So good trade frame, perfectly executed. The downside trade, you would love that one because this thing is already starting to roll over. Couldn't even get through, could not even get out of the MACD Red River, right? So this little spring and then failing, you're all ready to short that one. Same idea in gold. Now, just something I'll just notice here. Half of the screen is wasted. So you get all of this tightly clustered inside here, and half your screen, your usable territory is all white space. I would just ask you, what is the volume given you? Or there's even, what is the volume even given you? Or is it actionable, or is it just occupying space? It looks like it's occupying space to me. And then I would just say all of the space in here. Wasted space, and now everything is nice and clustered in here, and you can't really see anything. Look how narrow the little boxes are. It just drives me berserk. You got a lot of excess room up in here, so I like to see the road that I'm driving. I like to be able to zoom in a little better. So just some ideas. On the other hand, here's 10R. So I mean, that's not bad. Nice exit management inside here. So Joe is getting it done in the room. Let's see if this is going to work for me. I wanted to look at that DIA trade frame real quick. Do you guys do not have sound? Okay. Well, the replay will have it for you. Let's see. DIA, I think it was. So DIA moves in great big ocean waves. The trade frame the one that was in question was this one. This was the fake one go to trade right here. You may recall there was this sideways cluster, and Catherine took it short here, and then her stop, I want to say, was like she was picking the PSAR. Which was like right above the VWAP. So, the idea here is that when this thing doesn't work, I would say like right here, the VWAP flip or the RLXD, I wouldn't stick around much longer than that, and I would just take that as my loss, and then I would take this as my, my trade on the long side, and then I would consider this as my second entry. And you might go a little higher because you want to, maybe if you want to take out that one, you might have picked this one. And then by this point, you'd probably be ready to take half your position here, and then the other half probably over here with the manager. So what that pays you for is all of the, whatever fractional loss you had in here gets more than paid for by the agile stop and reverse. That's what a fake one go to looks like. So I want to just follow up on that. Okay. All right. That's everything I got for you. Let me get this published and posted, and off we go.